direction that is visible. If you're looking at the sign, the stock charts you're looking at, and they're all filled with snow or clouded up, you can't see one street sign from another, then you don't have a clear direction. Nothing's visible. And this is not what you want to have. You want to have a clear direction, a clear path on what to do. It's about maximizing the winners. Trading is about winning. And ultimately, that is your goal. That's the reason that you trade. You don't trade to lose. You trade to win. And so that has to be your goal, and it has to be in the back of your mind, and you want the big winner. You don't want to win second place or third place or fourth place or fifth place. You want to win first place. First place is maximizing your trade and getting that to the target. And when you've got a loser, sometimes you just got to dump it. It's like having an old beat-up car. You can drive it into the dirt till you have to trade it in and get a new one. But sometimes, you know what, it's better just to dump it. Just dump the thing and move on. Profitability results are good with big winners. Your P&L goes up. It's easy to read. And the results with big losers go down. And they can go down dramatically with big losers. The difference can be huge in your profitability and your P&L when you're looking at it. I find that when I meet a lot of people trading, you know, they have different situations going on with their money management. And one of these things has to do with greed. The bottom line is that greed is a waste. It's a piece of garbage, and you've got to get it out of your psyche and out of your system in order to be successful as a trader. The market is a phenomenal thing when you're profitable and making money. However, you have to keep the greed at bay. You have to just stomp it out. Really, the only thing greed is fear. So that is what greed is. And it's just have to cut it from your whole psyche, because it's a waste. It's a waste of your time. It's a waste of your energy. It's a waste of all the work that you spent to become good as a trader. You've got to learn to trade smarter, not harder, by using your time wisely, focusing on the goodies and maximizing those, and I mean really to the hilt. So it's about letting winning trades run. And if you can do this, you can have a huge impact on your P&L. And let me reiterate, huge. One huge trading day can cover 3 lost days. One huge trading day can make your week. One huge trading day can make your month. I'm not kidding about this either. So you really, really got to get the most bang for your buck when you're looking to trade and these things want to go on to work. It is okay to do ads and scale out of trades with some of your lot size. However, at least 50% or more of your trades should be allowed to run when working to the target. One important note is when a target is 100% clear, and I mean 100% clear, you have got to hang in to let your winning trade run, and with as much as you possibly can, with either the whole thing or as much as you can stand it if you have a real target at hand. So here is actually a quote that I said to someone months ago, and he reminded me that I said this to him recently because I helped him decide to get out of a trade. It was a core trade he was in. I sometimes say things, and they're so meaningful, I've started to write them down. As soon as your reason for taking a trade is invalidated, you get out. That's it. And this is a quote by me. In fact, this person's writing a book, and he's going to quote me in it. As soon as your reason for taking a trade is invalidated, get out. That's it. Making excuses, you know, and again, it has to do with the greed factor, but it's really just fear. Fear that you're not cutting it, you're making excuses. If the reason for taking the trade in the first place has been invalidated, then you get out. That's it. End of story. Whether you're down, whether you're up, you get out. If the reason for taking it is gone. This is very important. So the idea is just to cut the losers as soon as they are not working. The idea is not to give the trade more room and more room and more room until you are down twice as much as you initially risked, or until it's too late to even get out without getting hurt. The proper way to trade is to learn when a trade is failing and cut it. Sometimes I cut a trade if I see it's not working and it's not going to work, even if I'm up money, okay? Learn when a stock is doing something it should not be doing, and this is key. Learn the signs that the trade is going to fail before it does. It's different if a stock is not doing anything wrong, okay? But many times people hold trades in stocks that are doing something wrong and they hold them too long. The only reason to stay in a trade is if it is not doing anything wrong, whether you're up or down. If the trade is doing something wrong, you need to cut it with a loss sooner rather than later. Again, if the reason for taking it is invalidated, then you're out. So you've got to get a clear direction in your trading. What does that mean? For me, it means these things. Number one, having a good stock pick and a quality strategy. Number two, getting it at the right price with accuracy. 3, timing and precision in the entry in your trade. 4, having the right risk amount and conviction that you're going to move it and get it in the right direction with size. Number 5, stop placement. Again, this is where the risk and money management comes into place, and that has to do with detail as well. And last but not least is the money management of the exit. Because, of course, the goal is to get these things to the target if they want to go. If they're cooperating, you're making money, you play them as hard as you can. Consistently large profits come with accuracy and a purposeful design. It's not like you can just do these things willy-nilly. You really have to know where you're going with them. There has to be a target. There has to be a reason for taking the trade. There has to be a strategy in place. This is a real purpose to what you're doing. There has to be if you want to be profitable. And not only that, consistently profitable. And not only that, largely consistently profitable, meaning every time you get a good one, you're milking it for all it's worth. So we're going to go over some examples now. Everyone loves examples. I'm going to show you 2 trades. One trade that was a failure and one that worked, and we'll look at the results. Here was MRK. This stinker did not work on the day. It absolutely failed. And we could go over and over the reasons it failed. However, the bottom line is it shouldn't have gone over $45, and it did. It shouldn't have rallied over $45, and that was the end of the story as soon as this thing did. And it failed on the day as a gap. But when it opened and traded, didn't do anything wrong, and it set up. Okay, here was the setup. It triggered. Stop is right over here. Moved and flipped and booped me out really fast in that tail. Here's what happened. The entry time was 9:35. The price was $44.89. The stop was over $45.10. There was a nice risk amount, 21 cents. And for example, if you took 1,800 shares, you risked $378. And the stop, took me right out. Just took me right out. So the profit was 0. There was a loss in this trade. Let's go back and look at it. Here was where the stop was supposed to be. No exceptions. Really shouldn't have rallied over the $45 area, and it did. And even in a topping tail, no exception. Okay, the trade triggered. It should have followed through. There was no reason for this to rally at all on the daily chart, not whatsoever in the placement of where the gap was. And it failed. So you're out. You're out. You take the loss. Whatever your risk unit is, you're out. You take the loss. This is a loser. Okay? Now, what if you had not cut it? I'm going to go over this example first before I show you the one that worked. If you had not cut it, you could have lost 3 times the amount you were supposed to adhere to. If you either didn't put a stop in, okay, or took the stop out and just couldn't get enough. Amos is asking, yes, this is the entry's here. The entry is here as soon as it triggered right in here, okay? You can barely see it, but it's there. Now, what many people do is, not everybody uses hard stops. I do. I think that's important in the first 15 minutes of the day. I absolutely use them, and I always will. Now, if you hadn't used a stop, all right, because you wanted to give it a little more wiggly jiggly room, after all, this is MRK, so you love the gap, which I liked it too, and then it did this thing, and you didn't have a hard stop in, and then it did this, and you say, okay, fine, and you don't have a hard stop in, and it's back down in the area, and you say, okay, fine. Then what happens? Remember, this is if you don't have a stop in, and you're giving it room. What happens? Boom. Goes up and breaks another high of the day here. So first break of the high of the day was here. Second break of the high of the day is here. And it keeps going. Now this thing's in an uptrend. What are you going to do? So now you're treading water. You are down way more than you're supposed to be. You're not stopped out for the day because you give yourself maybe 5, 6, 7, 8 trades a day. But you're down a lot in one trade that you should have just taken the loss in. All right? And you haven't cut it. You're in denial. You're like, this is just, I know it's going to go down. I know it's going to go down. I know it's going to do it. All of a sudden does this. You start breathing a little easy now. You get this crazy tail down in here. It's almost back down to your price, but not quite. And then it comes back up again. And you're waiting, and you're starting to get convinced you're going to be okay. So you don't put a hard stop back in. You don't give up on the trade. Everything seems to be fine because you feel like it's going to go back down and work. But look, the time is getting late. And all of a sudden, what do? You know that you have to kill it then eventually. Because after it goes over this resistance area here, you got to be out. So it would have resulted in a loss 3 times the amount you were supposed to adhere to and basically over $1,000, which is way too much to be risking on one trade, 3 times the amount of your risk on one trade when you should have cut it, an hour ago, all right, an hour ago. So you finally give in and kill the trade, losing way too much. You let this loser go on way too long, okay? Because when this flip happened, then you were down more than you wanted to be, and you put a blindfold on. But this thing looked like garbage then. It was absolute garbage. This is the garbage picture, remember I just showed you? This is garbage now. Garbage is a short, okay? You don't do anything with this on the short side, then it's garbage. I never retook this then. I never retook it. Okay, after I got stopped out, it was done. I knew it wasn't going to work. And this is the difference. You have to know what these things are supposed to do so you don't let these trades run against you 2, 3 times what you're supposed to be risking. Now, you can protect yourself with a hard stop if you know how, and I suggest to do that, and I teach people to do that. But the rule of thumb is even if you're not sure where to put the stop, okay, if you don't know how or where it's supposed to be, so you didn't put a stop in because you weren't sure, and all of a sudden this thing gets away from you, which it does rather quickly, as you can see, you can't be in denial. You need to get out of the trade, okay? As soon as it starts getting to the point where you're down more than 2, that's dangerous. It's dangerous to your P&L, and look what can happen. All of a sudden now, here's where you're at. You finally cut it at 10:30, knowing now that it's not going to work, and of course it doesn't. And at one point I said, you know what, this thing's a buy. And I don't flip them, all right? But I said, I ran in here before, when it did this scoop in here. I said, you know what, this thing could go to 47 bucks today. I said, it's going to go to, 46 or whatever. And it did go to 46. It went over 46. It didn't make it quite to 47. Now, I don't flip my direction. I stick with what the gap is. It just was a failure on the day. The lesson to be learned here is knowing what it's supposed to do. And if it doesn't do it, knowing then that it's erroneous. It's a failure. You don't do anything else with it. You let it go. Just let it go. Move on. Lose the 378 bucks and move on. So here's an example of a fabulous gap that worked. And the target was 100% clear. This was EXPE. The target was 100% clear. Target was right here, and it was 100% clear to everyone on the planet. So you are in this puppy then, once it sets up to work, to the target. And you're up money as soon as you take the trade, and it's a beautiful thing. So here's an example of a winner. And a winner that is up, and you're getting it to run, and you see the target clearly, so you're letting it play out and do its thing. The entry time is 9:38. The price is 61.34. The stop is over 61.51. This is a better stop. 17 cents on 2,000 shares. You take $340 risk. You exit past the target. It actually goes past the target, which often happens once the momentum gets in these things. They just push on through. And the total profit, risking $340, is $64.80. 19 times the amount you risked you made in profit. Now let's go back and look at it. So 9:38 is the entry right here. Now the trade gets underway. You're up the second you take it. It's falling, falling, falling. What are you going to do? Quick cut this baby here. Just quick cut it as soon as you're up. Now this is a nice trade. I mean, this is a nice trade. You're up money. You're up good money in here. But around this number, let's go look at the daily chart. You're right around here. This is looming right below you. There's no reason to get out of the trade. So if you cut this winner short because you had one green bar around it, you would have missed the rest of this drop. And by this time you're in, or even if you cut it here, even if you cut it here with this, rally back up, which went over the pivot. Again, Have to know what you're doing with the trade. And you're still up. You're up so much in here, it's not even funny. All right, even in this rally, you're up a lot. And you could have done an ad in here too. So you take it down, you get the drop. As soon as this tail formation starts to happen, you're looking to get out into the 10 o'clock, 10:15 push now as it makes the drop. You're here. You're hitting the target into this. You see it? Right into here, and it pushes on down through it, and you get out as quickly as you can through the pop of the tail. Boop. All right. Beautiful move, beautiful trade. You were never down. You were up money every second. It was beautiful, whereas MRK, the second it triggered, it flipped. You're out. Okay, that's not a good thing. This is a good thing. See the difference. See the ease and the fluidity of the trade setting up and moving and pushing and doing it and giving it to you. You know, I talk about this all the time. The best days I've ever had, the market gives me the gap and it gives me the setup and the gap gives me the trade and it triggers and does every single solitary thing it's supposed to do. And that's it. It's a beautiful, beautiful thing. Now, if you had taken it off early, you still would have made good money. If you would have gotten out on the break of $60 right before that green bar happened, you would have made roughly $27.80. Still really nice. Still really nice risk to reward payout. Still nice profit. 8.1 times the amount you risk. However, this is nicer. Okay, I do see the difference. This is a lot nicer. More risk to reward payout. Still up money. Managing the trade, watching it, and a clear target was at hand. See, that's the difference. Clear target is at hand. So breaking it down, the profitability results if you cut the winner short and held the loser. How would you have fared? Let's just look at this example here. This is interesting. On the winner profit, not letting it run, remember you made $27.80. On the loser, cutting it too late, you lost over $1,000. Now, as it turns out, you still would have made good money, $16.82 between these two trades. Total risk to reward is 4.9. That's actually good. This is a result of my trading entry because I'm so focused and detailed on my entries that you can even take a horrific loser like that and a dinky winner and you can still be profitable. This is simply a result of the way that I trade. However, the results are so much better if you cut the loser. Don't chase it, be out. And of course, letting the winner run onto the full-on target that it's giving you and the chart is screaming, here, I'm going. And the momentum is already underway. On the winner profit, letting it run, it's $64.80. On the loser, cutting it is $378. The results are what? Terrific. $61.02, even with the loser, even with that stinker MRK, the results are great. Now you didn't chase it though. Total risk to reward paid 16.14 times the amount you risk, and this includes the loser. This includes the loser. And the risk is roughly, between 340 380. We're roughing out the risk. When you're trading live and you're making decisions on the day, you're roughing out your size as close to your risk as you can. This is real life time stuff. You got to rough it, and you have an area that you're looking for when you're sizing yourself. So the profitability conclusion is easy. Letting the winners run is the key to profitability and having huge trading days. Cutting the losers and keeping your losses contained will help you keep the money you make on big days instead of needlessly giving it back to the market. And I mean needlessly. There's just no reason to give so much money back in losses to the market. The market doesn't care. It'll keep taking losses. If you want to give it to them, just keep giving it to them then. You have to get to a point where you say, wait a minute, I have to figure out what's the right way to trade here. All right? And this is the right way to trade, where the results are high. The risk to reward is good. You're letting the winners move on and go and run themselves, and you're up on them already. So there's no reason to cut them. Your results will improve dramatically once you recognize the difference between a failing setup and a good setup. And that's what I was talking about back there with the MRK. And that's set up early in the morning, so it really should have run on to work. And the placement of that in the daily chart was sketching. So when it flipped, that was that. It was a total failure. It had every chance in the world of working. You don't make excuses for these things and when they don't set up and want to run. And things have to prove that they're doing what they're supposed to be doing. If a stock is shorting, if you're shorting it, it's got to be weak. If you're buying it, it has to be strong, and you need to learn the difference. What does strength look like? What does weakness look like? This is where the learning of the knowledge, the piecing it together comes into place, where you can see what a failing setup is or a good one. However, ultimately, the genuine quality in the Golden Gap plays, the plays I do, is the risk to reward payout. I mean, you can flub up the winners and the losers and still make out, as long as you don't keep chasing these losers, retaking them 3, 4, 5, 6 times, because the risk to reward is good. So even if you let that MRK run out of control and cut the one other trade there too soon, you still would have been profitable almost 5 times the amount, and that's really good. But the goal is to maximize your profitability for yourself to become a good trader. Because in between all of these gaps and everything, all the plays that we get, there may be days where you should just take a day off and do nothing, where the market doesn't give you anything and you don't want to push it. And let me tell you something, the more used to being profitable you are, the easier it's going to be to do these things. The more you get in a system, the more you get ingrained, the more you get used to holding, it's not going to be so hard for you to hold anymore. The same thing with cutting it. You're not going to feel like you got out too soon when you cut it. You're going to be relieved. Oh, I'm so glad I'm out of this thing. Woo! Just went over the high today again a second time. You'll be glad you got out of it. It's not going to be so hard. It's going to be easy then to do the right thing. So sustaining profitability is possible how? In order to really benefit from the moves in stocks as a trader, you need to learn how to enter a position at the proper time and manage the trade to maximum gain. If you can learn how to successfully trade by cutting these losers off and letting the winners run, your results will be consistent profits. Getting into a trade before the move happens can help you maximize your earnings for substantially more gains. And that means not chasing it either, all right? Not chasing EXPE. Getting out of a trade when it fails, like the MRK, will help you keep your profits from winning days. You don't want to give all your huge, beautiful, fabulous days back in losers. You don't have 3 great, beautiful winning days that you can't even pay yourself from. If you get stopped out for 2 days, letting things run off like crazy, over trading, having commission costs and everything else, and then by the end of the week, you've got nothing left. That's not what you want to do. It hurts your confidence, and in order to be successful, you can't have that in your P&L. The bottom line is the answer is not to make excuses when trades fail. Learn when a trade is failing. Learn when a trade is good and will reach the target. Learn how to have big winning days and stop having big losing days. This is ultimately the way to become successful as a trader. And by the way, you have to do both. I wish I could say that you could just have big, winning days and that would be enough, but you can't have big losing days either. You can't have big winning days and big losing days. You have to have big winning days and no big losing days. That is the key to the puzzle. I mean, this is it. This is how you do it. Keep the losses down and maximize the winners, and you'll see the results over time as you trade. So the bottom line is profitability matters. You've just got to use common sense. Add up the numbers, okay? You can't lose more or as much on the losers as you're making on the big winners. Those big winners should shine. They should shine. The light should shine on those things. When you have comma days, they should shine on your P&L and nothing should touch them, not a 10-foot pole. And by comma days, I mean any day when you're trading as a day trader and there's a comma in your actual day. Those matter, and they really matter when you're new. After you're trading for a while, you're used to having them, but you know what? You never stop loving them. Every day you see a comma. Every single day you see one. It's a beautiful thing. And they matter. They matter to your P&L. It keeps paying you. This is what keeps you trading. This is what covers the small loss days, the days you don't do anything, and you can still pay yourself and pay your bills and take a check. So they matter. It's a reason to celebrate when you get them, so you don't want to blow them on wasteful trades. One great system, in my philosophy, is all you need to make money. You don't need to be chasing, doing a million different strategies. It's just finding one good strategy, one good system to do it with. And it really is about the strategy. One solid strategy is all you need to be profitable. And I talk to a lot of different traders. They're doing many different things, chunking it with this, chunking it with that, chunking it with this. However, the level of focus and detail that comes with learning one thing far exceeds chunking it in 3 different strategies or flip-flopping even direction. Why? because there is a sixth sense that comes along with doing one thing well after you've done it and nothing else for a matter of weeks and months and years like I've done with this strategy, number one. And number two, you will miss some of the detail in these things when they're failing or when they're going to go to the target because you're not used to seeing it day after day after day after day after day because you're doing so many different types of strategies. So to each his own, but as far as I'm concerned, to be very successful and make a lot of money day trading, you've got to focus on one thing. And you have to play it with size once you get good. And therein lies the other caveat. If you want to trade with size, you can't be doing a million different strategies with size. It'll be too discombobulated. It'll be too much to manage all at once, particularly if you're in 5, 6 trades all at once with size. You've got to be able to recognize what is good and play them hard with size once you learn how to do the strategy. And the detail comes into the entries and knowing what the targets are. So the benefit of golden gap trading, which is the strategy that I use, is trading on the side of big money. I've been talking about this a lot lately because the direction of the market has been up, and I called the direction of the market bullish a long time ago, and I love to short. The direction of the side of the market was up. It was up. It was pointing up, and that was very clear to me. And when I trade gaps, I'm trading them on the side of the momentum. And how do I know that? It's the side of the money. How can you figure out, though, what the side of the money is on? You've got to learn a detailed way to read the chart, because the charts and the price of the stock that you're trading is determining the side of the power. If you ever are concerned and can't figure it out, you have to learn how to read price. Where is the direction? Where is the trend? Where is the power on the day that you're trading the stock if you're intraday? Like the day that MRK was setting up, the power was not on the downside. The power was on the upside. The people at hand that controlled the big money wanted that sucker to hold that 50-period moving average, and they bought it right on top of there. It dinged down quick and got bought up hard. And that was it, okay? So the side of the power, the side of the institutional money for that day was bullish. And that's why there's no reason to keep holding the trade. There's no reason to keep shorting it, going after it, and everything else. Same thing with the EXPE. Side of the power was down. You have to learn how to read what side the big money is on. They set the tone. And you as an individual trader, just play into it. That's the beautiful thing about being an individual trader. You can be nimble and play into it. You can take a position, you can put a stop, and you can get filled in the stop. You can make, good money playing these things without crazy, crazy size. You don't have to take 100,000 shares of something. You can make good money getting these things nimbly just by getting the moves that's being pushed by somebody else, the people that are pushing the money with the side of the power. So, in conclusion, I teach a class, and the class teaches how to read what side of that power is on. I call it the Golden Gap course. The Golden Gap course teaches a trading system on an advanced level for the purpose of potentially huge profits. The system focuses on maximizing winners and keeping losses small. The class teaches how to comprehend, calculate, and determine the price action to follow the large institutional money that is trading stocks in the market, of which there is a lot, by the way. The system is designed for traders to limit losses and maximize gains when gaps rate high, and then set up to trade. You've got to wait for the setup. You can't just take something right when it opens, because how would you size it? Where would you put your stop? What will be your risk? And something has to set up and trigger so you know that it's going to work. Trading on the side of momentum created by large money is how to become prosperous trading. And the Golden Gap course is a serious study of stock charts. It's all based on technical analysis, although a very detailed level of that. The class is an education of how to determine the direction a stock app will make on the day, and then how to trade it properly. So many people can say, yeah, well, I like this gap, but they have no clue where to get in. They don't know where to get in. They don't know where the stop's supposed to be. They're not sure. You've got to know. The class also educates traders on how to read resistance and support on an advanced level. More and more in the environment that we live in as traders, these things are going to become important for your survival as a trader. Why? Because we're living and existing and trading in a world with computers and black boxes, and there's going to be more and more and more of them. Every day almost lately I'm getting up and I'm saying this thing is heavily traded by machines. I can tell it right now, FYI. There's no looking for the usual buy setups or sell setups and things. There's no looking for the usual candlestick pattern formations. You've got to have the numbers. You've got to know what the numbers are. It's going to come to a point eventually where if you can't trade based on price and numbers alone, you won't be able to make it as a trader. This is where we're headed. So prepare yourself. Learn how to do it. Learn how to do it now while we're still in this situation, because it's going to come to a point where that is going to be the environment, and it's going to be more than 80% of the environment that we trade in. And it doesn't mean you can't make money. You can. But all the things back in the olden day that you learned that worked on their own accord with nothing else are not going to work on their own accord. They're going to be assists like moving averages and everything else that you can use to assist you trading, but they're not going to be the reason to take the trade. They're not going to be the reason to make the decision on the trade, and you're going to miss out on the move if you're waiting for some candlestick pattern that's never going to play out. You really have to know how to read the numbers right, and they're real. They're there, and so there's no reason you can't. I'm working on getting myself to a point actually where I don't use anything else. I see that in my future in the next 5 years as a trader. And then there'll just be no stopping me. I'll just trade all with the numbers. Even now, my charts are very, very clean. I don't hardly use any indicators in my charts. I'm really focusing on the price. So the Golden Gap course is a professional gap rating system. The purpose of this system is to teach you how to strategically find, pick, and play stocks that are professional bearish gaps. The Golden Gap course teaches a 26-point rating system to determine which stock to trade each day. The purpose of the system is to focus on quality stock picks and entries for full maximization of risk to reward payouts in trades, just like in the examples I showed you earlier. Here was a gap that I rated. This was the other week, last week. This was NUAN. I used my 26-point rating system. NUAN played out and got a nice drop in this. It rated 22 points. The object of the system is not to get 26 to 26 points. It is to get and play the best rated gap on the day. And over 20 is the number that I'm looking for. Wanting to get it over 20 in order to take the trade or watch it. Anything under 20 has a 50-50 chance of failing or not even setting up right. This one was beautiful, and it rated 22 points. And look how nicely it's continued. All this is going on in here with the market rallying. Beautiful. Beautiful gap is going to continue. This chart is lower. Was even looking for a bigger target on this one today. Held it as long as I could. I mean, I had a beautiful exit on this. I milked this puppy for all it was worth. And it could have gone all the way down here. It didn't do it, but it almost did. And it's going to get there as a swing trade. So ultimately, it's about just getting good at one thing, learning one thing, learn a profitable strategy. Learn how to take correct entries so you can get the best price so that you allow your winners to run, so that you take a trade and you're up money as soon as you take it. Not down, not suffering, not waiting. No excuses for these things. You've got to learn how to find targets so you know where the target is to even get out. Learn how to find quality stock picks so you have conviction in your trades, and learn how to hold for bigger moves, because that's what's going to help you have the comma days. That's what's going to help pay for some of your small loss days and still pay you money at the end of the month. And you've got to learn when a trade is not working, so you just cut it. When the reason for you taking the trade is invalidated, you get out. You cut it. You know, there's a race coming up, Memorial Day weekend, and these NASCAR drivers, these IndyCar drivers, you know what? They race to win. They have something that I use in my trading, which is ingrained in me. It's part of me now. I live it and breathe it every day. And it's called conviction. And if you come take my class, I will teach you what that is. You've got to have it. These race car drivers, you think that they are racing at these kinds of speeds and going there to make 5th place or 6th place or cut it off soon? They're giving it all they got. They've got conviction. They're there to win. You have to trade to win. And part of that means having conviction and making it so that you milk these things to go. Winning is having big days. Winning isn't making a couple $100. Winning is winning. Really getting it. Letting the market pay you. Let the market pay you. It wants to pay you when you do something right. The market does not want to pay you for doing something wrong. It'll take your money. But the market wants to pay you when you take a good trade. It will pay you. And those are the easiest days. You just got to get in a rhythm with it. But you've got to want to win. And when you cut your winners too soon, you're giving up. You're giving up. You're in fear and you're giving up. Don't give up. Have the conviction. Know what you're looking for. Go after it. Get the trophy. Win. I want you to ask yourself, what is your job as a trader? What is your job as a trader? You know, lots of people say, well, my job is to make money. My job is to make money. That's my job. That's my job, to make money. The reality is your job is to be a great trader. Your job is not to make money. Your job is to be a great trader. And the result will be the money. Okay? So your job is not to make money. Your job is to be a great trader. And if you are a great trader, you will make money. You will make more money than you know what to do with. And all your friends will want to give you all their accounts and all their money and say, please take this, trade this for me, Melissa. Won't you trade my account for me? Please just trade it for me. Here, take it, do it. Your job is to be a great trader. And every single decision you make and everything you do is committed to that, not the money. And what happens is when you're cutting these trains that are working too quickly and you're letting the losers run, you're too focused on the money. You're too focused on your money. You're forgetting what the job is. Wait a minute, what's the job? The job is to be a great trader. That is your job. If that's your job, you're going to far outbeat and outlast everyone you know, because most people can't see the fruit on the trees before it's there. And this is a way to have longevity in what you're doing in this business. And part of it has to do with investing in education, because there has to be a commitment. There has to be a commitment. There has to be conviction, commitment, and clarity in what you're doing. And if you don't know, you've got to get some. Don't invest in the market if you don't know what to do. That's a waste. That's garbage. Invest in education will help you learn what to do so that you can become a great trader. Valuable education saves you time and money ultimately. And in the long haul, you need to see this. There needs to be a long-range plan, a long-range goal. Many people don't see this ahead of time, but this is what I'm trying to teach people. Because if someone had told me this 5 years ago, I'd be in a different place now. All right? I would have been way, way, way ahead of where I am even now if someone had just told me this. So it's important. So your path to success is learning the Golden Gap, and the class is the Golden Gap system. It's May 18th and 19th. If you're interested, contact me at melissa@thestockswoosh.com. It's 9 a.m. to 5 o'clock Eastern Time. It's a professional bearish gap system for 2 solid days. The cost is $19.99, and the first day is all the 26 points rating system, and the second day is the entries and exits in the gap. I also do another class. It's called Wealth Manifestation. This is a trading psychology class that helps students understand what's going on in their head in reference to money for them to move forward. This is nothing about charts. It's all about what's going on in your mind and your brain to make trading decisions. It's very important. And I wrote a new class, which I'm doing for the first time in the next month, and it's about trends. It's very exciting. It's about how to read directional trends on charts and multiple time frames. I'm extremely good at reading trends. One of the reasons I'm good at reading directional trends and charts is because I'm a gap trader, and gaps help you read trends. But this is a new class that I wrote. I don't know anything like this out there, and it's very exciting. I am offering a special with every class that I have, and 2 months in the room if you're interested in getting the whole package. The Golden Gap course, the Trends class, the Wealth Manifestation course, and 2 months in the Stock Swoosh Show live trading room for $29.99. The savings is almost $700. So if you're interested in doing this, you can contact me at melissa@thestockswoosh.com for more information. I do allow free retakes in all the classes. I find that people need that, and that's a good thing because it means, again, you're serious, you're committed, you want to learn. So thank you, everyone. Does anyone have any questions? Looks like we're done a little early here, so I have time for questions. Or we can even go and look at some earnings that are going on right now, actually tonight. Does anyone have any questions about anything at all? Anything about the gaps? Anything about the 2 trades in MRK or EXPE? Anything at all about the market? Everybody's quiet. All right, let's quickly look and see if anything's gapping tonight because we have a couple minutes here. Hold on one second. I'm going to bring up my live